Hello everyone, it's Simon, Volume Profile Secrets Trading School. Yesterday I called a trade on the crude, as you see here. I called it for my members on Telegram. It's timestamped, day stamped, so it is there. I chose this level. As you see, there is a huge potential there, support level. It's an uptrend with a retracement, so I was anticipating a big bounce from this area. Why? Because the volume profile told me, my SAL indicator told me SAL levels are amazing, as you will see in this video. This chart, I put 25 level or 50 levels on it just for the purpose of this video, and you see my target there. You see this is one of the top 10 levels, because on this chart I put 10 biggest levels. On the small chart I put usually 20, but for this purpose I put 50, and on this chart again 10. So this level here will act as my wall to prevent the price to go through, so hence my stop loss. My stop loss was just below, and I called it exactly. My stop loss was called exactly as you see. I tell my members where my stop loss is. As you see, my targets, my first target was 77.30 because there was a potential of a huge attraction there, as you see from my SAL level, SAL indicator pulls these pending orders, and we'll show it to you, similar to bookmap, similar to other volume indicators, but this is special because it's designed differently. I designed this 10 years ago, and it's very dynamic. You can pick the biggest 10, the biggest one, biggest 10, biggest 20, up to you, and you can trade it according to your style. I use it for targets, I use it for confirmations, I use it to establish my stop loss. As you see, my stop loss is below the biggest, one of the biggest levels, because these will work as as walls or as barriers. So my first target was out. I did 6 sim contracts here just for the purpose of this video. We trade 3 contracts or multiples of 3. So my first target was on 4 contracts. I got 95 ticks. If you do 2 or 3 or 3 or 6 or 9, up to you. You can do mini. You can use the same methodology. I use it personally for trading CFDs, oil in the forex market, which you can leave the trade open for a day or two because it doesn't have margin increase. That's the forex market for you, or the spot forex. So T1 was taken out, and then we waited for the last target. It took a little bit of time, but my last target was 78.40. I was looking for 140 ticks move in this trade. I got 137 last target. So probably it was near 200 ticks trade between the first target and the last target. I'm talking about single contract. If you take 3 contracts, 2 contracts out, I think it was 30 ticks or so first target, and then or 25 ticks on 2, that is 50. Then 140 or 137. That's just under 200 ticks for me. But depends on the entry, on the stop loss, on how patient the students were looking at this. There was a barrier against us, but it broken. Once that broken, the market basically went to 78.40, which was my final target. But since then, you know what happened? 78.40. It pushed the market lower. So this target was not random. This target was not only because I saw the SAL indicator. It's because my strategy tells me this was the last point of defense, and the market